Excellent. All right, guys. Well, welcome. Good morning, everybody, or good afternoon, wherever you're listening in from. I am actually talking to you guys from the good old St. Louis, Missouri. I am on vacation over here, but I took time out of my vacation to just chit chat with you guys and share a little bit about what we know as far as technical analysis, analyzing the markets. And today we'll talk specifically about commodities and the cannabis stocks. Okay. So I am working off my laptop. I do not have my multiple screens. So just bear with me in the event that I have to maneuver things around a little bit differently than what I'm typically used to. Okay. All right. So to get started, let's do this. Where is my cursor? There you go. All right. Our risk and disclosure statement. We're not licensed financial advisor. I am not. Please understand that everything I share here today is for educational purposes only. I don't like to say entertainment because it is educational. And but the one thing is that we are not recommending any buy, sell, or hold on any security whatsoever. So please make sure you understand that. Everything that I analyze, everything I talk about here today, it's simply my opinion and how I see the market. My hope is that by the time I'm done here, you will find something that you find interesting, something that you think might be able to help you to improve your trading and investing altogether. We have multiple speakers here today, so I'm pretty sure even if my style doesn't fit you or suit you correctly, you'll find somebody else throughout this presentation that could possibly help you. Okay, so that's our disclaimer. We're not recommending any buy, sell, or hold for anything whatsoever, but hopefully I can share some thoughts that would help you with your trading. A little bit about myself. I've been in the stock market industry for about 9, 10 years now. But prior to that, I was in accounting and finance. That's where I actually got started. Studied accounting in college, worked as a mergers and acquisitions specialist, where my forte was analyzing the financials of these companies that were being bought, sold, looked at the valuation of them, and all that kind of stuff. And from that experience, you could say we did something what is called forensic accounting. Anybody who understands accounting would know what I'm talking about. We basically dug in deep to find things that most people would not catch, so to speak, and just to kind of help us understand what's going on with a company. I took that information and basically decided to use that in the stock market. And when I got involved in the stock market, at first, I realized that there were some things that were missing in the sense that I understood the fundamental side from the financial statement point of view, but I also realized that certain things move the market that had nothing to do with fundamentals. And that's what we now call sentiment. And in a way, really what that became, how I could figure out that was by understanding technical analysis. So that's what got me immensely involved in the stock market, wanting to understand what moved the market outside these financial numbers that I knew so much about. In that process, I learned a lot about technical analysis, and I relied on that much, much more because I could see things so much easier and faster. And the only thing I did was I tried to then merge what I understood with fundamental analysis and combine that with the technical analysis. And it helped me because I was able to weed out the stuff that worked and the stuff that did not work, so to speak. And so since then, we decided to only focus on companies that we knew were sound companies that were trading at attractive prices with very low risk and has a good potential for capital appreciation. And that's pretty much what we did. And so we got really, really good at that. And now that is all we do. Because of that, we don't trade every single day. So we're not day traders, we're swing traders. We focus more on stocks that we believe that are not only sound companies, but can give us some really good capital appreciation over a period of 2 to 3 months. And then we invest in those or trade those, and then just repeat, rinse and repeat the process. So in there, some of the things that we zoomed into, or I guess maybe subcategories of what we did, was we focused a lot on IPO stocks, If anybody's ever heard people talk about, oh, if you had invested in Amazon in 1997 when it was at $3, you'd be a millionaire today. Well, comments like that used to frustrate me. And it's also the reason why we actually call our company Right Side Trading, because in hindsight, anybody can tell you, oh, you should have invested in Amazon. Well, nobody tells you, oh, you should have invested in Dell, which went off the market and now just came back. Or some of the companies that went out of business altogether. They're not talking about those type of companies like, oh, if you'd invested in Lehman Brothers, you'll be a millionaire today. You won't hear those type of statements because those companies went out of business. But the ones that have done well, in hindsight, is what you see those type of comments made of. And that used to frustrate me. And so it frustrated me to no end. And then I realized that I couldn't stop it because you can't control what people write and put out there. But the scientific side of me said, well, how would we have known the stocks that were going to do that if we were back in 1997? What would we need to see in 1997 on Amazon to know that Amazon was going to do what it's doing today? Because if that's the case, how do we determine which companies today are exhibiting the things we need to know so that 10 years from now, people were saying, oh, if you bought that company in 2021, you'll be a millionaire. Does that make sense? And so we've heard it. Oh, if you had bought Dogecoin, you'll be a millionaire. If you had bought GameStop or if you bought EMC, well, all of those are usually in hindsight. The question is, what would you have seen before that whole situation happened that would have told you something is about to take place with stocks like this? And so that's what we focused our research on. That's what we focused. We took on projects and figuring that out. And so in that process, we learned a lot of stuff. Okay. We learned a lot of stuff. One of the things was this guy right here, Jim Simmons. I don't know if you guys ever heard of Jim Simmons or Jim Simons. Not Simmons. I keep on saying Jim Simmons, but it's Jim Simons. Jim Simons was a guy that I admire and respect a lot. And the reason why is because Jim said, um, uh, just a little bit of background on Jim, he is a multi-billionaire that created a supercomputer to help him identify patterns in the market. And he's a mathematician, so he's a numbers guy. I love numbers as well. But he hired physicists and statisticians to help him create the supercomputer where all it did was look for patterns because he came to the realization that there were patterns that occurred before moves took place. And that was something that intrigued me because it kind of goes back to what I was saying with IPOs. How would we have known that this was a stock we should have bought? Long story short, Jim Simon says something that really struck a chord with me. And he says, patterns of price are not random. Let me repeat that again. Patterns of price are not random. Okay. Even though they are close enough to looking like they're random, is what he said. So it would seem like it's random, but in actuality, it really isn't random. It just seems like that. It's very close to it. But if you pay close attention, you will see the patterns that were there. That opened up a Pandora's box for us because it was something I always thought existed prior to him hearing and saying that. But then after him saying that, I really took on this notion of, okay, you hear people say the market is manipulated. Yeah. So what? Well, what are the patterns to show that they're beginning to manipulate the market so that we can be what? On the right side of it. Does that make sense? And so those are kind of things that I thought was very, very important. And so, like Jim Simon says here again, he said, we search through historical data looking for patterns that we would not expect to occur at random. If you listen to what he's saying, basically he's saying if it's a random occurrence, he doesn't want anything to do with it. And when I saw that and I heard him say that, to me, I was like, wow, that is it. Why chase around every single thing that is out there? Like, I'll give a great example. I asked people, how many people heard about this whole Evergrande company in China before they mentioned it like 2 Mondays ago? Almost nobody. And so, how would we have known to be paying attention to Evergrande right before it became the big news that everybody started talking about 2 Mondays ago? And those are kind of things that's like, those are random stuff. And so Jim Simons would be a guy that said, look, I don't care for who Evergrande is or what the story is behind it. What are the patterns? Were there any patterns that was showing up behind the surface before the story and the news about Evergrande broke out? That's what Jim Simons was more important, interested in. And that's what we began doing. And so since then, we've been able to use that. We've been able to discover certain patterns that occur way before the news comes out. Sometimes the day before. A good example would be when the election happened in 2016. The Friday before the election, we started seeing patterns that market was getting ready to rally. At the time, we knew nothing about what it was. We thought it was because Hillary Clinton was going to win. And then, the results came out and said Trump won. And just like that, the Friday, Saturday, Friday, Monday, Tuesday before the election, everybody was talking, oh, this is the Hillary Clinton rally, is what they called it, the Clinton rally. And then Trump won, and then it became the Trump rally, Trump rally. And I saw how the media switched right from Clinton rally to Trump rally without blinking an eye, you know? And I said, wow. So it had nothing to do with the news, but the patterns that we saw prior to that. Does that make sense? And that's kind of like what we focus on now. Okay. So in that process, again, we started, I said it was a very, very good learning opportunity. So we started noticing there were patterns around earnings. There are patterns around stocks that issues dividends. There are patterns that you can see on stock splits. There are patterns of insiders buying and selling, or whether billionaires trying to buy or billionaires trying to sell. One of the billionaires we follow a lot is Warren Buffett. We actually teach, how we can use the patterns that we see that occurred. We did a whole research on the stocks that Warren Buffett bought, and we found out a very peculiar pattern that anybody can see. It's just that they don't understand that pattern on the stocks that Warren Buffett buys. And literally till today, when his company bought Apple and when they bought Kroger, the same pattern literally existed over and over and over. And so because of that, we look for certain companies. When he sold his airline stocks is because we saw the exact same pattern of when he sells. So it's like very, very interesting. Now, I'm not saying I know his strategy. I'm just saying we noticing a pattern in the charts for like times when Warren Buffett buys. So we discovered that. We discovered patterns on FDA approvals, seasonality, upgrades and downgrades, and so on and so forth. Okay. So out of those, the ones that we chose, because there was so many to choose from, we just couldn't do it all. The ones we chose to settle with were the IPOs. We chose to settle with that. We chose to settle with seasonality, stock splits, and earnings, and this insider buying and selling. So those are the ones that we focus on the most. When we see those patterns, we get involved in market. If we don't see those patterns, we don't get involved in the market. Okay. So let me show you some stuff. I'm going to begin with this. In 2020, we started seeing patterns that the market was setting up for a bearish drop. And at that time, if you notice what I said here, I said, we need to be ready. Let me see if I can change the color of this. I said, we need to be ready for either a slowdown at best or a reversal at worst. Now, ladies and gentlemen, that was before the pandemic because this was written on January 24th. Okay. So we said we need to be prepared for a slowdown at best or a reversal at worst. Then we said the writing is already on the wall. It is time to take profits, exit positions. The market is warning us to take heed. If you look at those choice words, these are not words that were finicky. These are not words that were straddling the fence of, oh, market might go down, but market might go up. It wasn't one of those situations. These was very unique, very specific. It's almost like a warning sign. And this is not one of those where you might see people who's been screaming bear market, bear market, bear market. We're going to experience the worst bear market since 1929. And they've been saying that for 2, 3, 4, 5, 6, 7, 8, 10 years, right? No, this was very, very specific because anybody who knows me, I'm more bullish than I am bearish. But in January, we said something has changed. we're seeing patterns that is unprecedented at the time. Now, we did not know that it was going to be the COVID situation, but we knew something was wrong. And that's why we warned people, because we can see patterns in the market. We all know what happened. Market dropped, the whole world was shut down, et cetera, et cetera, et cetera. Okay. But here's the thing, most people can tell you when, oh, we're going to experience the worst crash or the worst depression. But very rarely do you hear people talking about, oh, here's the bottom. Okay. So on March 27th, and actually we figured it out on March 23rd, we saw the patterns on March 23rd, but we didn't write the report to the March 27th. But in that March 27th report, this is what we said. Have we found the bottom, or is this just a relief rally? And the reason why I kept on saying it's just a relief rally was because most people say, oh no, the bounce that we've seen is just a relief rally. And our answer was the market is communicating that it is time to cover all short positions, exit all your shorts, and get ready for a rally. Like they say, the rest is history. Because what has happened since then is that the market went to all-time highs. Okay. So over and over and over, we've done this. Let me show you guys this. Let me see if I can go here. This is the report that we wrote in September. The same exact report, but September of this year now. I want to highlight something here. I want you to see this. In September, the September 3rd, which was that Friday, or Thursday, I think, because the market closed that Friday, or one of those days, either Friday or Monday was closed. But anyways, long story short, it says for now, it is best not to chase the SPY. Instead, investors will be better suited to manage positions until we see another buy signal, maybe in September. Okay, that was one of our warning signs. Then we said over here on the Dow, it says the Dow, which is the DIA, has only managed to drift sideways. This typically means there are problems underneath the hood. And if this is true, it can lead to a drop. The one that we expect in September. So wait, we were expecting a drop in September. Most people look at September now, it's like, wow, the market has dropped, but we were expecting a drop in September. Okay. On the Dow transports, we said, look, it showed signs that it was going to rally, but it failed. When it failed to confirm that rally, what this is then telling us is our right model, which is our proprietary model that we now use to see these things, is warning investors to protect themselves or sit on the sidelines until a clearer path is set. So as early as the beginning of September, we started noticing, hey, you shouldn't be too excited buying anything right now. The very next week, I want to show you this. We came over here and we says, things are beginning to look cloudy for the market in general. And the model that we created is telling us that it is time to do what? Short the SPY. Okay, it is time to short the SPY. This drop is part of the anticipated drop we discussed extensively on last Monday's webinar, which is what we did. We did a webinar. So to see the market dropping is actually refreshing because we know in due season, we will find great stocks at discounted price. This was prior to us hearing about the Evergrande situation. This was prior to us hearing about the whole shipping cargo situation in California. We were already saying something is already beginning to happen. We expect the market to drop. The question you should be asking is, what is it that you saw? And this is why I love what Jim Simon said. The market is not random. It might look like it's random. So when this whole evergreen situation came out, it seemed like it was random. This whole cargo thing, oh yeah, everybody's now just beginning to talk about it. Maybe so. That was the news that dropped the market. But notice how we began seeing the drop in warning signs way before it hit the major news. This, ladies and gentlemen, is what we basically focused our whole research on, and we can see that it's working again. Okay. Right here, we said the September drop that we expected is here. So again, it was short, sweet, straight to the point. Now, if I showed you, let me see if I can go here to the chart and show you something. Let's see if we can go here to the chart. Um, let's see. Actually, we'll just go here. Okay. So here's a platform of ours. I'm just going to show you something real quick. Let's go here to QQQs because I think it's important to see what I'm talking about here. Okay. When we were talking about this, we were talking about this back in September, early September, that the market was getting ready to do what? To drop, right? That was when all this was happening here. And I want you guys to see something. This whole green section on our platform basically lets us know market is bullish. Once it turns red, we know we turn into a bearish situation. And you can see right here, this is when all this was happening. Okay, saying this is September 10. Notice what our right model, this is our right model on the left-hand side here. Okay, I want you guys to see this. I want you guys to see what it's saying. What it said was get insured or get out of the market. And this is one of the reasons I said it's here. It's here. We expected this drop to happen. You see this drop right here? This was the evergreen situation or evergrande. I keep on saying evergreen, not evergreen. Evergrande. This was the evergrande situation. But again, we saw that weeks before that happened. The whole cargo ship thing was this right here, I believe, somewhere around here. But again, was it really evergrande or was it a cargo situation or was it a combination of both? The point is, like we believed already, and now we have discovered, is that you can see the setups before those news usually come out. And that's the beauty of what we created. Okay. And so you can see right there, it says getting short or get out, getting short or get out, getting short or get out, telling everybody, if you have stops, place stops in your long positions. And then right there, right before the whole evergreen situation happened, it said sell short. And what has happened to the market since then? Market has continued dropping. Okay. Market has continued dropping. This is not random. And that's one of the biggest things. If you learn nothing else from what I say today, is this. At least learn this one thing. The market is not random. If you're one of those who's confused and frustrated and believe that the market is manipulated, how can anybody win? The only thing I'll say is you just need to learn how to see when they're manipulating the market. That's all. Because once you know and you see when they're manipulating the market, you can position yourself on the right side of it. And that's why we call ourselves right side trading. Does that make sense? So, how do we relate this to cannabis stocks? How do we relate this to commodities? The same thing. Quite frankly, it's the same thing. Anything that has a chart on it, that has people investing and trading it, it's literally the same thing. Okay. It's just a matter of understanding what are the patterns to look for. Now, I won't go into all the details of what you need to learn, but I'll share one with you. And I listened to Anka's presentation, which is great, magnificent, by the way. One of the things she mentioned was seasonality. And again, you saw me talk about this earlier, saying seasonality is one of those things that we talk about. Now, I love seasonality. In our search for understanding the market, one of those that we discovered, like I said, was that seasonality. Now, anybody, and maybe I should even do this, I'm not sure if I can read the comments or not, but is there anybody who's ever traded seasonality before? What would you say is your biggest challenge with seasonality? If you've ever traded seasonality before, what would you say is the biggest challenge when it comes to seasonality? Now, unfortunately, I can't see anybody's comments. Okay, but please type that in. Okay, let me see. I think there's one that came up. Yeah, let's see. Okay, very good. RR is saying occasionally it does not work. Very good. Okay, anybody else? Anybody else? What is the biggest challenge with seasonality? I remember when I first heard about seasonality, I was super excited about it. It made so much sense. But like RR said, one of my biggest challenges was, how do I know if this one is going to work now? Okay, because I jumped into some, and after jumping into it, nope, it didn't work. It could have been working 10 times out of the last 10 years. Day Wally decides to jump into that same trade that's been working for 10 years straight. The day I jump into it was the day it decided not to work, right? And then it goes into a 9 and 1. If it's been doing it 9 times out of the last 10 years, the day I decide to jump in will be the day it does it 8 times out of the last 10 years. And I found that so frustrating. For a while, I actually even abandoned it. I said, I'm not interested anymore. But then, after I started doing all this research and I started discovering the patterns that you can see, I went back and applied it to seasonality. And I started seeing some things that I didn't notice when I first started seasonality. And that's one of the uniqueness in which I don't believe anybody else has what we have when it comes to seasonality. And that is merging this whole concept of understanding the patterns from a technical and quantitative perspective and historical data and applying that in conjunction with seasonality so that if seasonality was to come up and it doesn't work, we would see that the patterns that is supposed to show up when this seasonality is supposed to work is not appearing. Does that make sense? So let me give you an example. I'm going to go over here to this cannabis stock, CGC, Canopy Growth Corp. First and foremost, anybody who's wondering, hey, what should we do? Is this thing, should I be buying now? Because that's another thing I've heard people say, buy the dip. That's one of the biggest things I've been hearing people say lately. Buy the dip, buy the dip. It's like, no, 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 you just don't buy the dip. Because the same people that say buy the dip, right, would also say, or you at least, even if it's not those people, you hear another group of people say, don't catch the falling knife. And then the question is, oh, how do we know? And it says a dead cat bounce, right? So we go from buy the dip to dead cat bounce to don't catch the falling knife or try to grab the falling knife or it's just luck. Anybody can, if you got it, you were just lucky. And as a scientist, scientists don't believe in luck. It's facts. So we have something we call in a company FABD. You've heard about the word MACD. We call it FABD. FA. Let me write this down. FABD. We call it FABD. And the reason why we call that FABD is we say facts-based decisions. We don't want to make any decisions when it concerns the market without having facts to back it up. That's all we want. Facts. Okay. Not theories and not stories, but facts. And so when I look at this, the fact is that it's in a bearish mode. How do I know? All this section right here that is now in red tells us it's bearish. Pure and simple. Would we want to buy the dip here? Nope, absolutely not. We won't even consider buying anything until this background turns green. And that's it. It's very, very simple because now the data is supporting that things are ready to go higher. But we're not trying to catch a falling knife. We're not looking to buy the dip just because it's gone lower. We've seen many stocks that have gone lower, and then you say buy the dip there and it goes even lower, and you buy that and it goes even lower. And that's just crazy. And then they change to, oh, let's dollar cost average this, which is another concept that you say, if you understand what you're doing, you don't necessarily have to dollar cost average. You can literally wait until things have hit bottom and it's now reversing and know that it's reversing before you start buying again, rather than just keep on dollar cost averaging. Does that make sense? So one way is we know that if this background is red, it's bearish. Then we combine that with our proprietary right model, which now tells us one action per day or week or month, depending on what time frame you're looking at. And so once we see that, we can see what to do. Every day it gives us one action and one action only. So right now that this is a red background, it's really addressing those who are bearish. And what it's saying to those who are bearish right now, even though we had a green candle on this yesterday, it's saying wait and hold. Don't do anything. Just wait and hold. Don't buy, don't sell, just wait and hold. That's all you got to do. Make sense? But where does seasonality come in? All right, let's go here. Up here is our seasonality chart right beside it. What you see here is the chart of Canopy Growth Corp. Now, let me take you guys back to, say, this section right here. And the reason why I'm going here, we're going to go hindsight, but we can also see, well, let me start with this. This dotted line right here tells us where we are today. Everything on the right-hand side is the next 6 months. We only want to see what's going to happen over the next 6 months. This is the last 6 months. Now you can look at this and say, wait a second. Oh, the stock has been going down, but the seasonality says it should be doing what? Going sideways or slightly up. And this is where people get it wrong because they think, oh, because seasonality says it, then he has to do it. But this goes to what RR was saying earlier and what I had this challenge with, which is, well, what if it doesn't do it this year? What if it's been doing it for the last 10 years, but then this year it's not doing it, right? What do we do then? So you see, this right here this is what it's been doing for the last 5 years. Well, actually, the last 3 years, 3 to 4 years. But this year, guess what? It's one of those that it did not follow suit. So how could we have prevented ourselves from jumping into something that we believe was going to work, but then all of a sudden now it's not working? So the first thing is I want to use this section right here where this, based on seasonality, said around this period of time that I circled, this cannabis stock is supposed to go higher. Okay. On average, it has gone higher during this period of time. That's why we see the spike here. Anybody who traded seasonality in the past would have seen that and said, well, what's the date that it begins? We'll go down here. We'll say, wow, it begins in August 18th. So now they say, okay, August 18, I need to go here and start buying the stock because it has a seasonal pattern of going higher on August 18th. What we now say is, okay, if you know that type of information, great. But what if it's not going to work this time around? That's where we come back to the platform. So let me take you here to August 18th. This is August 18 right here on this day. And I'm not sure if you guys can read this right model. So let me see if I can make this slightly bigger. Make it one more bigger. Okay. I want you guys to see this. So what I'm going to do here is circle the right model. This is the right model here. And let's go to August 18 because this is when the seasonality said we're supposed to start buying, right? We're supposed to start buying because based on this seasonality, it's supposed to go higher. And quite frankly, a lot of cannabis stock is supposed to go higher around this time frame. And so I remember people looking at this and saying, maybe it's time to buy. We should start buying, right? But notice what the right model says. It said, nope, wait and hold. So you wait. The very next day, wait and hold. On this day, wait and hold. Right here, wait and hold. Now, interesting enough, somebody would have seen these three candles right here, said, oh my goodness, oh, it's beginning to seasonality move, right? But our model says, no, get insured or get out is what it's saying, because this is getting ready to do what? Go down, okay? Now, all of a sudden, we start going, and then right there, rather than saying it's time to buy, which is what the seasonality was sharing at the time, rather than saying it's time to buy, okay, what it was saying is you need to actually start shorting. So this is where you would have said to yourself, what's going on? Why is it telling us to short when seasonality is saying it's time to buy? RR said, does the right model recommends change when you highlight dates? I'm not sure what your question. Does the right model recommendations change when you highlight dates on? Yes, it changes. Correct. So it changes. So even though saying wait and hold, it's just based on the data and all the quantitative technical analysis, historical data that was collected, is saying, the trend is still where it's going, just wait and hold. Yeah, each one changes. It's just that every day was a wait and hold. And then on this day right here was when something different happened, where the data collected was saying, you need to get insured. And what does that mean, getting insured? Is either you buy some protective puts, or you place a stop, or you do something, but you need to insure yourself because this is not looking good. Or, like it said right there, get out. One action for that day. That's it. It wasn't telling us sit on the fence, because that's the biggest thing about, again, one of the things I want to do is make sure that we're not always sitting on the fence, straddling both sides. Oh, let me have one leg here and let me have one leg here just in case. When you understand the patterns, you get to see, oh no, this is a very clear sign that we should not be in this trade, right? And the whole thing that I created was to help us see, okay, when should I be buying? And if you bought something only to find out that you sold too soon, and he's like, you see the stock keep on going higher and higher, and then you regret it. And then now that even though you walked away with profits, it feels like a failed trade because you left so much on the table. Well, that was issues that I dealt with too in the beginning. And so I created this. I said, what are the patterns that would tell me, yes, I've reached this target or I've reached this resistance, but it's going to blow past that and continue? Does that make sense? That's what I wanted to discover. And that's what we spend a lot of our time researching. Like, how can we tell that this resistance is going to work versus the ones that's not going to work? So that way we don't sell too soon because we're scared of it bouncing to that resistance. We take all our money, run away, only to see that, wow, we should have left it in there. Make sense? And that's kind of like what this is. So for that reason, it takes all that information and it gives you one decision per day. One decision per day is what it does. And it tells you whether you should be buying, whether you should be selling, whether you should do nothing, just let your trade keep on growing. The wait and hold that you saw here, RR, was basically saying, look, if you're already in the trade, just hold on to your position. That's what it's saying. If you're already in the trade, hold on to your position. However, if you're not in the trade, you need to wait. Does that make sense? So it's addressing those two things. So whether you're in the trade or you're not, if you're in the trade, it's telling you hold on to your position, don't panic. But if you're not in the trade, it's saying wait, don't jump in just yet. Uh, Give me 1 second, ladies and gentlemen. Hold on 1 second. Let me take a gulp of water. Sorry about that. I hope you guys are still with me. Everything we created was to make sure that we don't have to guess. But at the same time, we don't want to look in hindsight and create the perfect scenario. It's about figuring out what to do every single day. And so if I was watching this live, I would literally just go down here. And what is it telling us to do? Wait or hold. So that means that if today's my first day coming to this Canopy Growth Corp, and I'm looking to short this, the right model is telling me to wait. Don't short right now. If I'm already in and I'm trying to see what should I do, it's just saying just hold on to your positions. Don't do anything. Okay. So the idea is for us to catch it when it first tells us to start selling short, which is what it did right here. Anybody who was paying attention to that then, that would have been the perfect time to start shorting. Does that make sense? And then after that, it says sell short. And again, notice what it says here: exit your long positions. It's like literally begging anybody who was bullish, please get out. Get out, get out, get out. Exit. When he says exit your long position, that means sell everything you have that is bullish on this trade right now. But wait a second, Wally. Didn't the seasonality say that we should be expecting it to do what? Go higher, right? Seasonality says is we expecting it to go higher, is what it was saying. But we can now see that's where a lot of people got into trouble with seasonality. That's where I used to get into trouble with seasonality. So let's say I wasn't interested in shorting this whatsoever because I wanted to follow seasonality. Can you now see how this would have helped me not get myself into trouble? This could be one of those where it's been doing it for 10 years, and then this year, for whatever the reason is, whatever the manipulation was occurring in the back and behind the scenes, okay, whatever news is going to come out that is going to be the one that everybody says this is the reason why it dropped, the right model was already warning us ahead of time. Don't buy this seasonality pattern here. Okay. Don't buy this seasonality pattern here. So the only thing that you would have lost is the time wasted waiting for this to happen. Okay. But I believe it's better than wasting capital and losing that capital being on the wrong side of it. Okay. If that makes sense to you, give me a why. Because I want to make sure that people understand this. It's not random. Does that make sense? This is not random. We have to understand that things happen for a reason. I don't care if it's high frequency trading. I don't care if it's algorithms. It's people behind them programming these things. And everybody behind these things that are programming this stuff, they do it for a reason. There's a reason why Warren Buffett would buy. His reasons are completely different from the reason why Carl Icahn would buy. Does that make sense? Thank you, May. Jürgen, I see you again. Welcome, sir. So, does my system follow all stocks? Right now, it's only the stocks that I trade, but we are actually uploading it with everything, even including um, cryptocurrencies. And then we're going to work on futures. It doesn't have futures on that right now. Okay. It doesn't have futures, but yes. Let me show you another one. Let's go here. This is Cronos. Okay. Cronos is another marijuana stock. All right. What is it saying? Again, let's go to the seasonality and see what the seasonality said first on this. So here's Cronos. So similar to this is an area where it could have gone higher. This area is supposed to go lower. This area is supposed to go higher. And then we should see it really make a big move over here. So all this is good, pertinent information. And the funny thing is, all these are facts. This is not, wishful thinking. These are facts because they're historical data. Does that make sense? Facts-based decisions. Um, Absolutely. Yes, sir, Jürgen. All right. Thank you. Okay. So I just used this past data just so you can see the results. But again, the whole idea of right side trading is we got to figure out what to do going forward. That's what we want to do. But let's just look at this again very quickly for the lady that asked. Well, I'm not even sure if it's a lady, but the person that asked. So August 20th, somewhere between August 20th and August 23rd, is supposed to rally. Okay. We look over here, somewhere between September 24th, it's supposed to do what? Start dropping. And then we can see here in November, it should rally again. And then the really big rally is somewhere in December. Now, that's the other thing that you have to take into account, or at least what we took into account, is just because it says December 30th, it doesn't mean that day exactly. That was one of the problems I had in the past when I first started as a novice. If I'll see December 30th, so I'll literally wait to December 30th. Oh, this thing said it's done at December 30th. And so I start buying on December 30th, regardless of any other information, only to find that I was on the wrong side of the trade. Make sense? We don't do that anymore. If I see December 30, that gives me, give or take, a week or so before or after. It can happen a week before. We might start seeing the same pattern show up a week before. Sometimes, very rare, but sometimes it might even happen 2 weeks before. And so I don't know if anybody's ever seen another seasonal pattern, which is something we experienced where we knew the seasonality, we expected for it to happen. By the time we got there, the stock has already been rallying for 2, 3 weeks now. I was like, wait a second, the majority of the move has happened. And that's because the mistake we made was we thought, oh, we had to wait to that day exactly. And so what we do now is when we know a stock is supposed to move in any given week, the week prior, maybe even up to 2 weeks prior, start placing some alerts on that and say, show me when it starts moving so we can go back and check. Okay. So for the person who asked about this, let's go here again. This was the first move right here. This was in August 23rd, just like the others. Let's go here to August 23rd. Here's August 23rd right here. You guys seen this? August 23rd. It says wait and hold rather than buying. Wait and hold rather than buying. Get insured or get out. I almost, wanted to use some choice words. Get out. Exit your long positions. Get insured. Get out. Exit. I mean, it's like it's warning people. Even when we started seeing some potential bullish sign. And the reason why I said potential bullish sign is because this whole section right here started turning green, but it still said get in short or get out. So all this would have told us, wait a second, the seasonality is supposed to move up, but we're not really moving. And right there, ladies and gentlemen, is what I believe we have that nobody else has. That has helped us to say, don't get into seasonality stocks that are not going to work and get into the ones that will work. Okay. So then we knew, based on this as well, that on the 24th, it said, let me just go back here. So somewhere around here, September 24th, we have a short-term downtrend, which is this right here. You guys seen this? Okay. Well, let's go here. Where is September 24th? So right about here, it's telling us exit your long positions, right? Get in short or get out, get in short or get out, and sell short right there. So it didn't give us our sell signal on the 24th exactly, but literally 6 days later. Okay. 6 days later, it finally gave us our sell short signal. And now we can see what's happening here. Does that make sense? Could this help you with seasonality? If you know commodities are supposed to move, or any stock is supposed to have this move. I hear people say, oh, Apple, when they have their Apple day, stock really does this. How would you like to know whether or not the patterns are showing that money is beginning to flow in? Because that's all this is showing us, is whether money is flowing in or not, right? Well, not just all that, but it's more than that. It's looking at technical patterns. It's looking at historical data to see, wait a second, are the same patterns that were there a year ago, 2 years ago, 3 years ago, 5 years ago, 10 years ago, are they still there again or not? Because even though we know it's supposed to move, I want to know, are the same patterns there or not? Make sense? Now, I know going forward, if I look at this chart, I say, wow, this is something I would want to anticipate. So much so that, again, I would even sit back and say, let's figure out how to be patient enough and wait for this move in December, January. Okay. And then that way, when that time comes, am I seeing the same patterns? What we have now done, what you don't have to sit down and spend years doing that we have to do, is we can now see whether the patterns are there or not, simply by going to the right model. One other thing that I will show you here is I can also then say, look, and this is the way we program this. Consistency to me is more important than profit. Does anybody understand what I'm saying? Consistency to me is more important than profit. Is this model volume driven? Absolutely not. That's one factor we don't even look at, because there's so much more factor than volume that we don't even consider volume when we're looking at this at all. Okay. It's more so, what were price points like back then? What were the moves looking like back then? How much money was flowing into this back then? What type of technical patterns were showing up back then? We use a number of indicators, but those indicators all showing the exact same thing during that period of time. The answer is yes. Are they doing that now? Yes or no? We look at quantitative data. It says, are the same quantitative data that existed back then showing up now again? Yes or no? And then based off of that, it would then let us know, yep, I think it's a good time to be buying this. Okay. If I click over here where it says seasonality scan, I can click on this. And what I want to find is, in the next 6 months, could you please tell me the most consistent rally that we can find? The most consistent rally we can find. And when I look over here, what I see is this green section and this red section. Okay. If I click on here again, I can take it off. If I click back here, I take it out. Now, what I like to see is first, I like to identify the areas with the largest moves. Okay. That's the first thing I like to do. This is what we see. This is the area with the largest move. And then I say, and that's if I'm going long, which is what I'm predominantly doing. Then I say to myself, if I find the most consistent, I already know that this seems like the most profitable. Where is the most consistent? I click on this. If that green bar lines up in the same vicinity of the circle that I drew, then I now know not only do we have one of the most consistent rallies, but also one of the most profitable rallies. At that time, even though this is showing me December, January, ladies and gentlemen, guess what? This is a stock that I will not miss trading come December, January. Does that make sense? And you might say, well, what about today, Wally? Well, that's fine. All we have to do now is go through this platform and find the ones that are doing it today, the ones that are going to do it next week, the ones that are going to do it next month. And you can start planning this stuff ahead of time. But the one thing I always tell people is nobody should say, oh, the stock market is risky. Nobody should say, I don't know how to get involved in the market. I realize my time is running up. I spent too much time talking about this. Let me just do this. Here is gold. Just fast forward here to silver and gold. Very similar things happening here. This is the seasonality on silver and gold here. You can see the same thing. It was supposed to go up June, July. It has been going down. If we go back here, you'll see this is June, July. This is June right here. It actually gave us a buy. I want you guys to see this. And because I'm running out of time, I'm just going to end it here. So in June, I want you guys to see this. In June, it gave us that buy signal, which correlates with the timing of the rally that's supposed to happen in June right here. You guys seen this? This rally right here. And so we come over here to the chart, and in June, it gave us that buy signal. Everything looks good. So, okay, guys, it's time to buy. So we started buying. The very next day, say, hey, buy some more. We bought some more. But then this happened. And right there, I remember saying, wait a second, that's not right. Why should we be placing stops? Now, mind you, we had no idea what was going to happen here. All this was unknown to us at this time. We had no idea what was going to happen, right? But on this day, 2 days after buying, says, place a stop on your long positions. And it's like, okay, we'll place a stop on our long positions. The very next day, we got stopped out. Boom. And then it even went worse because it went from, wait, place a stop to get out. You see what it says? Exit longs, get out, exit your long position. It's like, wow. But this is supposed to have a huge seasonality rally all the way into August, September. But now it's telling us to get out. And then the very next day, it says sell short. So we had 3 days for this to let us know something had gone wrong. So we literally had all the data that said it was ready to buy, but whoever manipulated the market, quote unquote, started changing their mind and decided they were no longer going to be buying. And what ended up happening was we saw that. Call it manipulation. People say, oh, they sucked in the retailers, all that kind of stuff, whatever it is. The beauty of this is we now have data that can guide us through seasonality properly. My time is getting up, so this is what I'm going to do. But you can see since then, it's been going down. We now know gold, silver, all of them have not been doing so well. There's so much more I can share with you guys, but here's what I'm going to do. Let me present you with my offer, all right, because of time. Let's go back to my presentation slide and do this. My offer is typically $299 per month for the software. I'm going to give it to you guys for $97. Go to this link right here, rightside.trading.com/deals. When you get to the page, you will have an option to buy month to month, or you can subscribe for an additional discount if you go 3 months in advance. Okay. I will highly encourage you go with the 3 months because there's a discount there. Next week, Wednesday, I'm going to be having a webinar. So not on Tuesday, September 28th. It's going to be Wednesday, October 13th. Wednesday, October 13th. Okay. If you go and sign up, you will get an email from us letting you know. It's going to be either 6 or 7, I can't remember. But if you can't make it live, it's going to be recorded. I highly encourage you guys to take this because with the way this market is dropping, we saw it coming. I didn't even get a chance to go over the seasonality of that so you can see what to expect. Every single thing that's happening in the market right now, we anticipated that, we expected it. The question is, when is it going to bottom? Most people have no idea. And when it does, most people say, oh, it happened in random. But remember what Jim Simon says, it seems random, even though it's not. I'm going to show you those things when you come in on Wednesday, if the market hasn't already bottomed by then. Okay. But even if it does, it doesn't matter. The key is knowing what to get into going forward. Most people understand that October, November, December is the best quarter of the year. Anka even mentioned that earlier today. The question is, do you know which ones to get into? Not only which ones you'll get into, but which ones will give you the most money. When you look at all this information, say, wow, Apple tends to rally X amount, as opposed to Tesla, which rallies Y amount. Now you can make your decisions before you even jump into these trades. And then you use the right model every single day. If you are the type of person that wants to trade once a week, look at it once a week. But the right model will guide you each and every day, each and every week, each and every month on how to stay on the right side of that trade. Make sense? Guys, $97. Try it. Even if it's just for 1 month. I encourage you to try it for 3 months because for the rest of this year, this is the best quarter we're going into. Markets have dropped. We're going to be finding stocks at huge discount. Wouldn't it be nice to know that you have an additional tool that can keep you on the right side throughout the rest of this quarter, making sure that you're not in the wrong stocks or getting out before it's too late? I hope that makes sense. Grab yourself a copy, come join us on Wednesday, and then every Monday night to the end of this year, we will get together, we'll talk about the markets, talk about some stocks, we'll use the platform to help us see what we should or should not be doing. Again, Anka, Dave, Jim, you guys are awesome. Thank you so much for having me on the call. I'm going to go ahead and wrap it up and turn it back over to you, Dave.